Hey guys, Mike here. So what an interesting day in the market to say the least. And I tell you, you knew it was going to be an interesting day because did you see what happened with Bed Bath & Beyond when they said, what was it, last week, they're going to be probably filing for bankruptcy? And I put this in the morning news, Britain. I'm just going to tell you what happened. Basically, pre-market's up 19%. At one point in time, it was up 75%. So meme stock mania was back this morning. I think it closed at 24%. Yeah, so if you say you're going to file bankruptcy, that and firing folks, that'll get your stock up very, very quickly. And there was a few things that happened today. I mean, obviously, the markets were really green. All of a sudden, they hit a certain resistance level and sold off, and the SPY and the S&P, that is, ended up red for the day when it was actually up over percent at one point in time. But, you know, the Cathie Wood stocks, any high beta stocks, cryptocurrency stocks, you know, through the roof. It was one of those type of days, and we're gonna talk about that because I find it interesting that, you know, when tech stocks get, you know, overvalued, that kind of stuff, get kind of crazy with the PE ratios, you know, value investors will come out and just pounce them and pound them, right? But I want to kind of talk about what's going on with the Dow stocks today, and we're going to do that right after we talk about the markets here. And what you really see happening here, just FYI for yourself, is, you know, I told people, hey, I think the S&P actually looks bullish because, you know, you're looking at a bullish MACD cross, the RSI is over the 50, you know, but also, and then you had the 50 crossing the 100. But if you look right here, you had this volume gap, right, and this volume profile right there. And so stocks tend to move, you know, pretty fast, up and down, depending on where they're approaching it at. And that's what happened today. It blew right through it, and then, of course, it hit that volume shelf and went, boom, wait a minute. And you can see right here, rejected, started selling off, you know, basically the rest of the day. But, you know, the bulls were able to step back in and hold it back up right there, as you can see. But if it falls below that, you know, on the short-term time frames, yeah, you can see it fall pretty fast, right? I mean, that's what happens usually when you get these gaps and stuff. And the other thing to look at, and I only use this for certain purposes, but, you know, max pain is a real thing. And what I really look at is, where do market makers not want it to go? Look at the puts from 385 down. Massive. Look at the calls to the right. Not massive, right? So where would you want it to go if you were selling this stuff? And if you could control it the best you could, right? And they have a certain amount of control, you know, then that's where I would want it to go, is up today especially, right? And the other thing to watch out for is the golden pocket area, right? It kind of briefly touched that 618 level and then got rejected off, but you can guarantee that's where the bears are going to be sitting, just trying their best to push this down. And that is another area where you'll sometimes see reversals happen as well. And then there's Tesla, and this is the 30-minute chart, so a smaller time frame, but you can see what happened. Shot right through that volume gap right there. Gapped up. As soon as it hit the volume shelf, though, started trading sideways, started coming down a little bit like the rest of the stocks did once they started hitting those levels of resistance and stuff. And you can see the MACD started to roll over. Obviously, RSI heading down at that point in time. But if we look at it on the daily, look at that right there. That's a huge gap. So if it can get up here, it can start to move, right? You see calls starting to roll in, things starting to push up. The RSI is not oversold anymore. Bullish MACD cross right there on the daily. So this absolutely could, if the market wants to take it there. And, you know, one thing that was interesting, you would think this is the kind of news that's been affecting it in a negative way, but they're offering more discounts. And if we click on this, I'll put this in the Discord, you can see Tesla offers discounts in Singapore, and what they're offering is $5,000 for electric vehicle purchases who trade in their existing internal combustion vehicles, and another $5,000 credit against the cost of the certificate to operate a car in Singapore. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit that like and think about sharing the video, guys. And so it was interesting that news did not affect them in a negative way, because like Lululemon came out and said their margins are going to be compressed, and guess what? Down 10% pre-market. Okay, they got crushed for saying that. And so, and other companies have said it and got crushed. But Tesla and the CEO said it, and so far, you know, because you had this massive drop, you know, it's obvious to see a bounce, or I guess it's normal to see a bounce. What's happening, but it is stuck between, you know, there's a lot of calls up there, a lot of puts down below. The $100 put wall still in place, and so it's going to be interesting to see, do we trade within a range right here, like 105 to 120, 2-ish, 23 or somewhere in there, because I believe the weekly options I expect to move is like between like 106 to 123, and it broke up to that today, so before selling off at the end. So that's going to be interesting to say the least. But what's amazing to me is I don't know what's going on with the bond market. I'll be honest with you. I mean, look at this. This is the 2-year Treasury yield. I mean, you can see they're saying, nah, you guys are going to cut. I mean, it's dropped off a cliff, right? And it keeps dropping. The others keep dropping. And obviously you see the inversion. I mean, I don't know how much steeper this thing is going to get, but we're talking about going back here to the 80s for crying out loud. So I don't know. I mean, how steep can this yield curve get? But more importantly, is the bond market just broken, or are they right? Right? They're still saying, nope, the Fed is going to blink. They're going to cut rates this year. And of course, remember, they're saying that because they see the economic data coming out, and they're saying there's going to be a recession, and that's the only reason the Fed would actually try to cut, is either try to avoid the recession, or we end up getting in a recession, and then they start cutting, trying to actually stimulate the economy and stuff and pull us out of it. And so, but they're not taking the Fed serious. And I don't know if you saw Daly out there today, man. She was out there, this is one of the Fed presidents, saying everything underneath the sun, she could say, trying to sound hawkish as can be, and she's usually probably the most dovish one of the group. But, the market was like, I don't know. The S&P kind of listened to her. The Dow was red, whatever. But, high growth stuff, high beta stuff was like, we ain't listening. We're going. And so it just ripped and roared until the very end of the day when people started taking profits. And let's not forget, Jerome Powell speaks tomorrow. And so you can guarantee there's going to be a whole lot of volatility when that man speaks. I don't expect him to say anything like bullish or anything. But again, it's how the market perceives what he is going to say. And that kind of brings me into, I told you yesterday, some people think there's this new bull market starting, right? And the new leaders are going to be like the Dow stocks and things like that. And tech is going to underperform, right? And tomorrow I'll go a little more into that, and I'll show you really what they're talking about. But it got me to think, I said, well, let me look at some of these Dow stocks, right? Because I know anytime Microsoft and Apple, Tesla, Amazon, Netflix, any of the rest of those big ones, their PEs will get really high. People are, oh my God, how could these things overvalue and all this stuff, and don't buy it, and blah, 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 all that good stuff, right? And not saying they're not right. That's true. And of course, those PEs and all the valuation metrics of these tech stocks have come way down, right, over the last year. But I said, let me compare that to what's going on with Dow stocks, because remember, the Dow stocks are considered more value stocks, right? Your McDonald's, your Walmarts, this kind of stuff, Home Depot. And so just to give you an idea, this right here is the PE ratios. There's many ways to value a stock, I get it, but PE is kind of a popular one. And as you can see, Amazon still has a massive PE ratio at 77, but you got Microsoft at 24, Apple's at around 21, Google 17, Meta still at 19. It was like 8 or something. And of course, let's not forget Tesla. Let's come all the way down to 32. Remember, it was unbelievable PE before the start of the year. And so it's down to 32. And then now let's look at this. Let's go over to some Dow stocks. So here we go. This is McDonald's, 33 now. It keeps hitting 52-week highs, right? Look at this one. Walmart, 44 PE ratio. Okay, so those two companies alone have bigger PEs than Apple, Microsoft, Google, and Meta. Okay. Then you go in here and you have Caterpillar, 17.6. Not too bad, I guess. I don't really know what its normal is. Amgen, 21. And these stocks have been on big runs. Cisco, 17. Home Depot, 19. Merck, 19. And then you got UNH, United Healthcare, 23. And so those value stocks have higher PE ratios, especially McDonald's and Walmart, than the big tech companies, right? Which were the leaders coming out of the last bear market. And my question is, like, how high do some of these ratios have to get for where people start to go, wait a minute, maybe they're starting to get a little overvalued here. What's going on here? Because, I'm not going to do a lot of research on McDonald's or Walmart. I mean, we know them and stuff. But, everything is based on growth. And so, maybe know in the comments, how much growth does McDonald's have in it? How much growth does Walmart have in it compared to any of these tech companies like Apple, for example, or even a Tesla, or even a Microsoft, or anything like that, right? And so I just find it funny that here we are sitting here with a Dow, I guess 6.5% off an all-time high now, and all the stocks they're doing where people are saying that's the new bull market, right? And I'm thinking, my God, look at their PE ratios now. If you're telling me they're fixing to keep going and go higher and higher and higher, it's like, ooh, okay. I mean, let me know what you think down in the comments. And I can see you riding them up, but at what point in time do you feel like, I'm just asking, what point in time do you feel like those Dow stocks are starting to get a little overvalued if you don't feel like they're already there? That's the big question. And then how far down do tech stocks have to get before you say, okay, I guess they're worth buying now, right? That's really the big question. And the other one's going to be with tech stocks, I'll tell you right now, is the head count. And I just found this today, but this kind of gives us the number of employees. You got Meta, Alphabet, Netflix, and Amazon, right? And you can see 2019, 2021, and then third quarter 2022 is the latest data I could find on their head count. And some of these have already announced more layoffs. But you can see Meta has a lot more employees than it had in 2021, a whole lot more than 2019. Google's sitting there with about 30,000 more than 2021. So will they keep cutting? Netflix, we don't have the data for. Then Amazon, obviously less because they've done all these layoffs than they had in 2021. But just look at 4 years ago. I mean, they've doubled the amount of employees just about. I mean, that's pretty significant. I mean, you look at Amazon, obviously it has a lot more employees than it used to have. And so the question is, how far down does that head count have to get? Obviously, those numbers have changed because they have all announced, I think they've all announced more layoffs already that's going to happen throughout this year as well. And so, you know, what to see on that. But again, who was it announced last night? And I said, watch, stock's going to be green. It was one of, I can't remember which one it was. They laid off another 3,200 employees, stock goes green. So if you want your stock to go green, or if you own the stock and you see them lay off employees, it's going to go green, okay, because they're going to cut down on the cost. And the other one is, you know, one other reason the market went up today, especially semiconductors, because the dollar, once again, is red, right, going down. Will Lithium support? Who knows? Will it maybe make a comeback? Don't know about that. But again, what I say is the thing people underestimate, and we're going to get to see this in the fourth quarter earnings because the dollar has been weakening for quite a while now. It started in the fourth quarter, is how much more money they're getting to keep to put to the bottom line just when they do the currency conversion, right, from all those overseas dollars going, when they were converting before, when the dollar was going up, they were losing money. Now they're going to keep a lot more of that money. And I'm just going off what Nike said. They said 5% more. So you know how much money Nike makes. And so, you know, for Apple and all the rest of them doing this, and plenty of Dow stocks, I mean, most companies that are trading on Wall Street do international business. And so that's going to be interesting. And so, and then how the market's going to receive, like growth should be slowing, obviously. So the top line, they still might miss, but the bottom line is obviously going to make it for a lot of it because they're laying off people. And just with the currency conversion now, you know, how much is that going to make up? That's what we got to find out. And how much is Wall Street going to value? They're looking at more top line, bottom line, growth. What are we looking at here? And so we got to find out how they're going to react. And, you know, are we going to see 20, 30% drops on some of these companies? I doubt it, depending on who they are, because they've had so many already. But, you know, that's kind of where we're at and stuff. So we'll see. Let me know what you think down in the comments when I was talking about value versus tech and who you think, more importantly, who do you think is going to be the sector and the type of stocks that are going to be leading when we finally do get out of the bear market officially into the next, I guess it'll be 5 to 10 years. That's the question I have for you guys. So anyway, hope you got some out of this. Hit the like and subscribe button if you did. Really appreciate it. And I'll see you guys tomorrow.